All right, everyone, here we are with ticker symbol AAPL, Apple Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So currently, Apple has had a major drop after hours. We're talking about this has actually dropped from 117 almost, which was one of the highs, all the way down to about 108, 109, and it's trying to hold itself up. This is a very broad stretch here, and we want to look at this closely so that we can pay close attention to what's important for tomorrow and the next coming week, because tomorrow, Friday, this can possibly break through support and hit newer lows, or it can start to work its way up closer to the 50-day moving average, possibly giving some control again to the bulls. So let's look at what's important here. So Apple had a run. It recovered from 103 and down here at the 104 number. It rose up, it fell, and then it started to rise again, and it went all the way up to 126. One of the most important numbers right now for the bulls to continue to hit newer highs. But the highest point this has ever valued at was 138, and we're currently all the way down at around 110.34 and hit new lows here of about 108. So it has been in a bearish run since they announced the new phones and the new products, and then here we are closer to earnings. I believe earnings was today, and here we are with this major drop. It literally dropped almost $8 in a matter of hours. So we need to pay very close attention to this and see what is important for tomorrow, and like I said, for the next coming week. Tomorrow ends the week, and we want to know what is going on here. So the 50-day moving average is 113.44. I'd write that down. Super important number. 113.44 is super important. Once that gets crossed, we're back into bullish territory, and as long as we're below it, we're in bearish territory. For you to know right now, because the resistance level is the highest point before this fall, where this is probably going, I would use this indicator right here in this candlestick, and if there's one higher than that later on today, take a look at it. But right here at 110.45, it is super important to keep that in mind, because we are currently at 110.34 with the highest peak. It's currently leveled off at 109.77, and then the lowest point reached in this bearish run, which is super important as well, this support level, is 108.59, and I will explain that in just a second. So if this breaks through that 110.45 mark and starts to work its way up to newer highs, it does not mean that the bulls have gained control or anything. It just gives you some sense of direction that this is getting closer to the 50-day moving average of 113.44 to get back into bullish territory. Now, the bears are a lot closer to support than the bulls to the 50-day moving average and the resistance level. So if the bears break through this support of 108.59, I want to emphasize to all investors, pay very close attention to the behavior of this stock and how quickly it's hitting newer lows and pulling away from the 50-day moving average in a downward direction. You're going to want to see, based off of your 1 minute, your 5 minute, and your 15-minute chart frames, and see what is going on with those chart frames. You're going to want to see who is dominating and the inflow and the outflow of these charts and purchases and sales to see what is going on, if this is going to continue to tear through support levels and newer lows, or are the bulls trying to reappear before it breaks through support or slightly after to bring this back up. Now, on the other hand, we have what the bulls want. If they accomplish this, they broke through resistance, they broke through the 50-day moving average, they got back into bullish territory, and they're breaking through the highest point before this fall. If they're able to break through this, that is 116.92. They need to turn that into a support so they can break away from the 50-day moving average in an upward direction, hitting newer highs and new resistance levels. But right now, the bulls, what their main focus is right now, getting back into bullish territory, and they'll need to break through 113.44 to accomplish that. Now, if they can pull away from that, hit newer highs, Then they're going to focus on the resistance level, which is 116.92. Turn that into a support and pull away to hit newer highs and new resistance levels. I hope that with these cues, you guys are well equipped for tomorrow's trading day. As always, if you found this video helpful and informative, please do so and subscribe. Share this with your friends and community. And don't forget to hit that like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here, and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.